Hey everybody, it's Ed Zoller with Villa Realty Group with your end of December market update for the end of 2024. 2024 was a crazy year in real estate for Southwest Florida. I'm going to update the graphs and go over everything. For those of you who do not know me, I've been a real estate agent over almost 24 years now, full-time here in Cape Coral, Fort Myers, Florida. And I'm here to kind of give you some stat analysis, some technical analysis on this to see what 2025 is going to have in store. So let's get started. So first, we're going to talk about the inventory. I have this graphed out since January 2016. So as you can see here, it went up another 5% month over month. We now have over 11,600 things for sale. And you have to go back to 2009 to see inventory that great. Our inventory was 42% higher than it was this time last year in December, year over year. And more inventory really means just lower prices. It's basic supply and demand. Trend analysis you can see here is in September, the inventory starts increasing until about January, February time, and then it goes back down as the buyers come in. It's what we call our season. Season starts in January and ends kind of in middle of April, right after Easter. And that's when the inventory starts building back up again by the time it bottoms out. So for buyers out there, you want to have the time where you have the inventory the highest. And it's the highest right now. Do I think it's going to go higher based on the data I pulled? Absolutely. And as you can tell here, this arrow, I just duplicated 3 arrows showing that it kind of bottoms here and it tops up here. And as you can see, this arrow, it still has more to go. We have another month or two until this thing will peter out. And we might be having 13 or 14,000 things for people to decide on. So inventory went up. The amazing thing to me is that of new construction is 20% of this inventory. So we're going to talk about the builders here in this next slide. Not so much new news, but something that the builders broke a record, and it's not the kind of record that they wanted to break. So the Census Bureau comes out with the new homes for sale by builders, and they segment it into north, south, east, and west. And so I just looked at where we are in Florida at the south. And it takes the data all the way back from January, month by month, year by year, all the way back to 1973. And as you can see here, in 2006, the builders had the most inventory in the southern states by far. Not quite 300,000 homes for sale inventory. And what happened right afterwards? We had our crash. And now look, it just topped over 300,000 homes. Builders have never had this much inventory in the South ever. And we just hit that peak. So this is quite amazing to me. Builders are going to run the show. Builders are going to force the market to go down. They're going to want to sell all this existing inventory like they did last time. They're doing it in the form of incentives. And although they've been hesitant to bring prices down and offer up more incentives, the market's kind of speaking right now, and demand did not do well. We'll get to that in the next slide. So as these incentives go up, you'd think the sales would go up, but they didn't. I have a builder who's offering up to 80, 90,000 worth of incentives. And that's still not enough for people to jump over the fence. So in reality, we're just having a big correction as a market needs to. We're not affordable. And so as the inventory for builders go up, that's probably going to be your play. It's all about timing with builders, for the right time, the right quarter, the right slow sales month. If season is not much to speak about for this year, you're going to see quite a bit of panic from builders in the summertime and late spring. But if season is what we all think it's going to be, which is this massive amounts of buyers coming in, we got plenty of inventory for them to choose from. And this is what's going to happen is people are going to get more forced towards the new buyers and kind of forget about the used market until the used market catches up. So I thought this was interesting that builders broke a record, topping over 300,000 new constructions in inventory to sell in the southern states. So our demand, if you've been watching this entire year, you know it's been fairly bleak. You know, we hit our peak in March, which is right at that long-term average, and it's been steadily going down, as it has done every single time it hits a peak, and always in March. But you can see this downward trending slope. It's funny to me that in 2024, this crazy year, we'd had to go back 40 years to see the worst sales we've ever had. And we hit that. October, 731 sales. the worst ever. Number two, this month, 865 sales, and last month with 888 sales. It's number three. All the top five worst sales months in our history in the last 40 years of Southwest Florida have all occurred in this year. Not a coincidence. I believe the reason being is, yes, we had an election. We don't have a swear-in yet. The Feds dropped the short-term rate twice. But look at what happened. Right now, interest rates are sitting at 7.16% for a conventional loan. They were at 6.875 before these cuts. So they went up almost a half a point. And that's going to cause this low demand with this increasing inventory and these builder inventory breaking records. We're going to see quite a bit of sales going on in 2025, to say the least. Our average home price, I call it the stubborn mule because, yeah, okay, it went down 0.26%. It never is the smooth graph, right? Like you saw here back when we were slow and steady, and then it gets jagged. Obviously, this was the peak of our market in 2006-07, and then we crashed right back down to just over 100,000 average price, and then we got back on track. We kind of stabilized in 2017, and then you saw that slow and steady. The price is just going up that 3 to 5%, very methodical, a couple little spikes here and there. But then COVID happened and this tremendous spike up. This is what I call fake equity. This line right here, this is probably where the housing should be. But instead, we had this huge increase, just like we had over here in 2006. And so what does that mean? That means for sellers, this is a big piece of data that says that this fake equity is probably going to go away. Did you deserve it? Did you earn it? No. It just was because of COVID. If you bought prior to 2020, this is about where the prices of the average home should be, about 250,000. Let's take this line just slightly up and go all the way today. Maybe we actually hit that little over 250 mark. But this excessive increase in pricing due to COVID, which we talked about in earlier videos of why COVID caused the prices to go up so fast, not just here, in almost every southern state, as well as many states up in the north as well. We're going to have our correction in 2025, as you can see here, but we need to kind of lose all of this, what we call fake equity in the market right now. Even though the builders are offering these mega incentives, this is why the prices have stayed high. Also know that when you have such a small sampling, the second worst sales in 40 years, when you have a $7.7 million home in Bonita Beach close, as well as over $30 million plus homes, it kind of skews this average price. But when you start a graph and you do average home price, this is what you have to stay consistent. So as we get more and more sales, this is going to get more in tune to where I believe the market's going. The average home payment as a percentage of Southwest Florida's average household income. So actually our household income went up. Problem is this graph right here. Anytime it's above this line, which I call a stable market, this is what people can afford based on household income. And if I take the interest rates and the average price of going from 6.88 to 7.16%, this is why this graph is getting further away from stable. And this makes it unaffordable. Anytime it's above the line, it's a little unaffordable. If it's below the line, we are affordable. And from 2009 all the way to 2021, started 2022, we were an affordable place to be. And we had migration, and we had people moving to Florida. They're going from the expensive northern states coming down here where it never snows. It's the common thing that we've seen in Southwest Florida. But there was one other time that didn't make sense, and right here, when they had those garbage loans and everyone was buying homes and they were well beyond what they can afford for a house, well, we're right back up to there again. And now that this graph I thought was trending down and a little blip last month, no, it's getting further and further away, which just means, are we an affordable place to live? No. So the market's going to correct. Matter of fact, based on this number of household income, the average wage in Lee County should be able to buy the average home. Affordable right now is about $1,500, $1,600 a month. But the average home is around $2,300 a month. That's 46% overinflated. Does that mean prices go down? No. Prices, the monthly payment needs to go down. And that is 4 different things: price, interest rate, taxes, and insurance. So as insurance goes down, that will help. As taxes go down, which doesn't not going to happen until November of next year because taxes just were the highest they've ever been for every single house because we in Florida are taxed in arrears, which means we use last year's value to determine this year's value. Interest rates need to play an important role in this. And of course, price as well. If interest rates don't go down, price has to go down even more to make up this 46% overinflation that we have right now. So this is just the Zillow Home Value Index. I just used this graph because when I went back to 2000 and graphed out the Zillow Home Index and kind of when you understand where zero is and what that means, it just means when you're close to zero, you are stabilized. And you can see here in 2012, we stabilized. And then the market, each house was going up about 0.9% a month, 3%, 4% a year. Hit a little peak here in 2016 because we just got off of a foreclosure crisis. People were house values were going up because we kind of got rid of all that inventory of short sales and foreclosures. And then it kind of got back down towards stable again, dipped a couple times in 19 when they increased the interest rates. It did affect the prices here temporarily, went right back up again. But right here around COVID time, look at that huge escalation. 2.6% a month is almost 30% a year appreciation, not at all normal. And so when you have these kind of things, you have usually an equal and opposite reaction. What I track is from this month in 2006 all the way to pretty much 2011, I counted consecutive months of negative home value growth, and that was 59 months. Right now, we're at our 17th consecutive month of negative home value. So have we bottomed yet? No. Have we stabilized yet? No. This graph will tell you that as this graph gets closer to this zero line here. Price cuts. Obviously, when you have more inventory, you're expecting more people to get more competitive at their prices. So it's not this isn't a shocking graph that we at one point were the number one city in the Florida for price cuts at like 37, 38% price cuts. 22% is our long-term average. And we've popped up to the 26, 27% again. As you have increasing inventory, that's more competition. This is going to cause price cuts to happen. And even with builders cutting their prices now, that's going to add to this. I expect January 2025, we'll see more of this. So let's just talk about the month-to-month change from December 1st to January 1st. Housing units for sale, 11,000 up to 11,600. That's a 4% increase. The amount of solds went down 2.5% from the second worst month in 40 years. And now this month, December, being this now the new second month, worst month in 40 years. Pendings usually tell you what's going to happen next month. And so last month's update, you saw 1,300 pendings turn into 1,200 pendings. So it's not surprising to see the solds went down as well. Well, if you see here, pendings went down a whopping 15%. Last month, they only went down 7%. So do I think this number, just based on that alone, I believe we're going to see those sold numbers in January go down, but season might be a miraculous thing. We might get a bunch of people already coming down here to buy homes, but I need to see this pending number come up, not down, to say that we're going to have more sales. The new construction thing is just getting ridiculous. As you saw in that one graph, they have the most they've ever had. In Southwest Florida, up 2%. So all these incentives, end of the year incentive bonuses, all these some builders were paying out more incentives and coming up with these holiday specials and reg tag sales. New constructions right now, we're up to over 2,300 new constructions in just Lee County alone. This is what builders are going to struggle to sell. We need to see this number coming down. The more number this goes up, the more builders are going to be able to influence the market, make it what they want. And in this case, since buyers are not buying their prices, they're going to have to come down in price to make it more affordable. Our time on market went up as we expect, increasing inventory, more competition. Things are sitting a little bit longer, up 4%. Our median asking price, as we thought, with all this increased inventory and low demand, you would think you'd see this go a little faster, but now we're down to 392.5 as far as asking price, with 389 being the selling price, a 3% down of the average of asking price to sold price. All of this pinpoints towards next month being a slow month. More inventory is going to go up. We'll peak out in February time, and that's when the buyers come in, and that's when the frantic craziness is going to happen. How much power and strength is that going to be? We have no idea. But just kind of giving you a little snapshot for what we expect to have happen next month. So are we in a buyer's or seller's market? I don't think this is a surprise. Of course, we are in an extreme buyer's market. This line here, that 4 months worth of inventory, I call is a stable market. In 4 months, all the buyers would gobble up all the homes in 4 months if no one else came on the market. We have over a year. We are over 13 months of inventory. As a matter of fact, this is the most inventory, months of inventory we've had based on these really bad sales. 11,600, that's a lot to chew through when you're only selling 900 homes a month. So I hope it doesn't go above this 14 months because I don't know what to call this bracket here. Moderate buyer's market when you have about 6 to 8 months worth of inventory, extreme when you go 8 to 10, when you have a year's worth, it's super crazy, and then over a year, wicked, crazy, once in a lifetime buyer's market. I don't know what to call the next one. I'm just going to call it stupid. A stupid buyer's market, where right now it is the best time to be a buyer. Not so much for being a seller, but greatest time to be a buyer. But for how long? A year, 2 years, 3 years, maybe just through this season, we'll have some sort of correction, either correction interest rate or insurance. I am seeing insurance slightly going down. So those of you out there that think we're an uninsurable place, 2 new carriers came in last month. Very competitive rates. They actually beat out all the other carrier quotes that I've gotten. So I can stay in tune with the insurance by getting quotes from my clients. And I just had one go from an insurance rate of like $2,400 a month, $2,400 a year for a house, and I was able to get it down to $800. Same insurance, same policy, same terms. So there are some more competitive companies out there, which is going to help. So let's just go over real briefly what this is. The builder inventory is at an all-time high, worse than 2006. This is going to drive the market towards builders are going to want those buyers. They're going to influence those buyers to come to see their product by either doing massive price drops, more incentives, lower interest rates, buying down the interest rate to 4.5% when interest rates right now are sitting at almost 7%. That is going to make a monthly payment such that the house could have dropped 100 grand in price. And people don't see the power of buying down interest rates. It might cost that builder 30 grand to buy down that rate down to 4.5, but it'll save the buyer like they dropped the house 100 grand. So it's going to make sense for them to keep that up this year. It's just a matter of, for buyers out there, I want you to be patient. Demand dropped, inventory's up, pending sales decreased. It is Cricketville down here. There are no buyers out there to buy homes. It should pick up as we expect every year from January to April. This is our season. This is what agents are striving for. For buyers out there, I say patience has been worked out for you. If you haven't bought anything, it's been worked out well for you, unless you got one of those crazy builder incentive deals. But my advice for sellers out there is, if you're thinking of selling in the next 12 to 24 months, take this data into account. Your time to sell is between January and April of this year. Why is that? Because I don't believe interest rates are going to be impacted that much by the feds and that much by the economy in the next 12 to 24 months. It'll trickle down, but it takes time for that to happen. So if interest rates aren't going to go down that hard, and taxes won't go down until November of this next year, 2025, and insurance is getting a little bit better, the only thing to make a house affordable is going to be sellers going to have to drop their prices, probably back down to 2019, maybe even 18 levels, because back in 18, 19, we had a 4% interest rate. So what would prices have been if the interest rates were 7, 8%? So that's how you have to think about this. Where are prices going to go for the next 12 to 24 months? If you're a seller out there, you got this fake equity that was made during COVID, and it's going to quickly disappear. The fake stuff, not the real equity you got, like if you bought it before 2019, but the fake one that you gained from 2020 all the way to 2023. So you could cash out if you feel it's overvalued. And for those of you who feel like you're upside down, Ed, I can't, our house is only worth 300 grand and we pay 3.25, and I don't have 25 grand to cough up at closing, nor would I ever do that. There is a way, if you're struggling and you're having a hard time with these increases of insurance and taxes, and your escrow was short and your mortgage goes up, there is something what's called a short sale. I just successfully did 3 of them. I haven't had to do a short sale in 16 years. Did 3 of them this year successfully, where the buyer was able to walk away from the home, made no money, but didn't have to pay any money, even though the bank accepted a short of what was owed. In this case, it was a $305,000 loan, and they took $275,000. So the new buyer gets a home. If buyers out there thinking of buying a short sale, there's really nothing wrong with them. It just means that you get to pick up a better deal than what you'd normally get on the market. So that's my advice to sellers. My advice for buyers is patience, patience, patience. The market is in correction mode. Let it come to you. It's a market of falling daggers. Don't reach. You want to be prepared though. And so we don't know when this is going to correct itself. And I don't know your time frame and what you're thinking of buying a home. You want to buy it in 2025. There's nothing wrong with that, but patience. Wait for the what you really want, the thing you're going to love, the thing you're going to live in for the next 7 to 10 years. That's the kind of house that you're going to go after. And only if the incentives are enough. You got to know what you can afford, you know it's comfortable for you to afford, and we wait until houses hit to that, because it will. Now, if you say, "Oh, I can only afford $900," I don't think it's ever going to go with that. It never hit that last time, even in the worst of our crashes. But it's going to be something where the average wage person can buy the average home in the average area, and that's what I'm waiting for. If you're wanting to be prepared, there's a couple things I do with my buyers. One, you want to make sure your credit's in check. You want to make sure that your credit is in build mode. 90% of the people I talk to are either destroying their credit or maintaining their credit. They're never increasing their credit. If there's any time in your life that you want your credit to be high, it's when you're buying a home. So you can get all the incentives and all the great things that banks are going to love to write for you, better interest rates, all that good stuff. So I can help you that. I can teach you the rules of how to do it yourself. You don't need to pay a credit counselor or a credit restoration company. Stop paying those people. They don't want to build your credit. They want to take your $50 a month and do it really slow. You can do this in 60 to 90 days. I just got a person 180 points in 90 days. I got another person 80 points in 2 months. It all depends on what you're doing and why it's low, if it is low. Second thing you want to make sure is that your employment's in check to qualify for a loan. There are some jobs, there are some people who change venues. We want to make sure that the timing is right financially for you. Your mind, you might want to buy a home. That's half the battle. The other is getting you financially qualified. Figure out how much money you need to have saved. Even if you're getting down payment assistance and come out with $0, the banks still want to see a minimum in your account as well. And the fourth is kind of pull it all together, have a plan, execute the plan. There is no chance for failure. Just with teachers, since 2016, 340 Lee County teachers became Lee County homeowners just using this program of mine, and not a single one of them failed because they had a plan. Those of you might be listening saying, "Oh my God, real estate's horrible. And we had this horrible situation. We lost money," and that hasn't happened. And there's a reason, because everything from buying a home, from step 1 to step 24, baby steps, teaching you how to buy a home the proper way, that's my job. Sorry to make that long. The data that I acquired, obviously, I'm sourcing it right here. And if you have any questions, concerns of any kind, this is my number. Here's my email address out for everyone to see. If you want to see if you're qualified, even if you're not a teacher, go to teacherscanbuyhomes.com, fill out a 3-minute survey where it says get qualified, and that will prompt me to give you a call and tell you, what we need to do. Come up with that plan, whether you're going to buy this year, next year, or 4 years from now. Still coming up with a plan to find out what your goals are. Thank you all for watching this long. Have a happy new year, and I look forward to hearing from all of you. Talk to you later. Bye-bye.